Hello everyone, I hope you're doing great. In today's video, we are going to learn about business economics. We are going to learn the meaning and definition, nature of business economics, scope in this particular video. In the next upcoming videos, we'll learn four business economic problems, types of economic systems, and role of price mechanism. So let's get started. Before I begin the class, I want you to close your eyes and for the 10 seconds and think about this scenario. You have 10,000 in your hand. You want new iPhone. You also need to pay your college fees and your mom wants to buy a new mixer grinder at home. What do you do now with that 10,000 rupees? You have to make a choice, right? What's happening? That struggle, that calculation, that choice, that is economics. Welcome to Business Economics Chapter 1. Let's get started. So, the word economics came from the Greek word that is oikonomia. Anyone wants to guess what is oikonomia? Oikonomia is nothing but household management. And Adam Smith wrote the book Wealth of Nations in 1996. This is the first modern book of economics. What happened prior to 1776? Any idea? People used to think gold and silver as the wealth in real terms. But what happened? Adam Smith changed the ideology. What did he do? What did he write in his book in 1776? He said, wealth is what a country produces. That idea changed everything. Got it? So, this is an MCQ question. This is definite MCQ question. Adam Smith wrote the book Wealth of Nations. When did he write? 1776. The first modern book of economics. That's nothing but wealth is not just gold and silver, it's also what the country produces. That one idea changed everything. Section 2. We'll move on to section 2. Two fundamental facts of economics. What is the first fundamental fact? First fundamental fact is human wants are unlimited. Yeah, right. We have unlimited wants. Today we want to have ice cream. Tomorrow we want to have pizza. Day after tomorrow we want to have death by chocolate or whatnot, burger, sandwich, etc. But what? Resources are scarce, right? We have limited money. We have limited pocket money. That's limited. Parents' income is limited. Water, oil, natural resources, all are limited. That's the scarcity, right? So let's move on to the ICAI definition. What does it write? Economics is a study of the process by which scarce resources are allocated to satisfy the competing unlimited wants of human beings in a society. That's nothing but how do I use these economic theories to make better decisions? That's nothing but how do I use these scarce resources to fulfill my unlimited wants? That's nothing but the economics is all about. Two fundamental facts. So, what is business economics? If we move on to the business economics, here's an interesting thing. Economics studies how the economy works. Very theoretical, right? Business economics asks different questions. How do I use these economic theories to make better business decisions? This is nothing but business economics. That is, suppose the best, better example for you guys is what I can say is this you are studying income tax law. That is economic theory, you can say. But you're filing the tax returns. That is the business practice, how you're filing it. You're the practical way of approaching things. You're filing the returns. If your client has any issues, you're solving it. That is a practical. That is nothing but business economics. I hope you got this point very clear. There's a MCQ question ready. That's nothing but business economics is the use of economic analysis to make business decisions involving best use of organization's scarce resources. Joel Dean says MCQ favorite question. Business economic is the use of economic analysis in the formulation of business policies. And the last definition is it's a component of applied economics. How you apply the economics. It's like how you file the returns using the knowledge base you have. That is the book. You studied the Income Tax Act, then you're practically filing the returns. It fills the gap between economic theory and business practice by using quantitative techniques. What are the quantitative techniques? Like linear programming, regression analysis, capital budgeting, even break-even point analysis, cost analysis. Using the graphs, you analyze it. Got it? Now we'll move on to micro and macroeconomics. Microeconomics, for example, it's like a zoom in into one firm. You only see one thing, one industry, one pricing, consumer behavior, factor pricing, behavior of firms, one location of industry, one particular thing. But macro is like a national income or output. It's like zoom out to see the whole economy, general price levels, economy and growth, balance of trade, fiscal policies, economic growth rate, unemployment, everything. These are the macro level. Now we'll move on to the nature of business economics. There are 8 characteristics. Business economics is a science. And what is science? Basically, there is a logic for everything, right? Cause and effect relationship. There is a logic for everything. They use math, statistics, demand supply analysis. You have a data table. You make trend analysis. That is a science. You have a data to back up. Correct? Next one is micro basis. Micro base, firm level base, pricing, internal thing, output. What should I produce? Internal thing, right? And the third one is macro, GDP level, inflation, what's happening throughout the economy and everything. Fourth one is art. It's a practical application. This is very interesting. Science what will it do? It will just give you the, cause and effect relationships. Art tells you how you should do it. For example, two managers both know that demand for their product will fall in the next quarter. One panics and cuts the prices drastically. Another artfully launches the loyalty program and holds the prices steady. Same knowledge, different art application. Fifth one is market theory, understanding the demand supply theory and everything. This is nothing but when price increases, the demand decreases. When price decreases, the demand increases. Market theory for your business, applying it. It's pragmatic in nature, solves real life, scenarios, problems. It's not just theory. Pragmatic means practical. Business economic just doesn't say demand and supply, determine price and stop there. It says, okay, so now how does this specific company price this specific product is this specific market? It deals the real life scenarios. Ola studies the search, for example, during rains, the prices of auto increases, right? They didn't write a research paper, Ola. They solved a real problem using economic logic. Interdisciplinary. Basically, if you have to analyze something, you need stats, maths, finance, marketing data, finance data in order to perform your analysis skills and everything. Operations. For example, Amazon pricing algorithm. They what do they do before doing all analysis? They take all the data, economics, demand, supply, maths, algorithm, statistics, data, market, that's competitive analysis, all that at once. It's interdisciplinary. And the last one is normative. Normative is nothing but says what should be. It does not just state what is like Positive economics, if I can say, reporter just states the facts. When petrol price increases, the people drive less. This is just a normal fact. But normative is nothing but this should. And whenever you see the should word, it is normative. Okay. The advisor, if it says what should be done, right? The government should reduce the petrol tax to help middle class. This value judgment, this is normative. Business economics is mainly normative because it tells managers what they should do, but it also gives a positive analysis also, right? What will happen, they also know what will happen, and they also give suggestions to the managers saying what they should. The difference between the positive and normative economics: positive is nothing but states what it is exactly, no value judgment involved, and there is cause and effect relationship, and price increases, demand falls. That's all logic. Descriptive, not prescriptive. Normative is what you should do now. It involves value judgment. Okay, the prices of petrol has increased, the government should reduce the taxes so that the middle class can go everywhere. That's the way. Government should reduce tax. Prescriptive in nature. ICI business economics combines both, but leans more towards normative decision making and policy. Next, we will move on to the scope of business economics. Internal issues. It's a micro. And external issues is nothing but the macroeconomics. Internal issues are nothing but demand analysis, forecasting about your company, production cost analysis, choosing the cheapest method, inventory management. This all happens within your firm. Market structure, pricing, resource allocation, profit analysis you're doing for your firm. External issues will be economic system. Economic system is the country capitalist, socialist, mixed. This affects your business. Stages of business cycle, it is in boom, recession, national income, employment, government policies. Only national income is nothing but only when the people have money, they'll buy your product, right? These are the external issues. Weather conditions, government policies. Government, what does it do? It gives exemption, cost reduces. All this matters. RBI capital market reduction. RBI increases the interest rates. Your borrowing cost will increase. All this affects. You can't just you can't just be, aligned towards microeconomics and do your business. You also have to understand what is happening throughout the economy. Even during COVID time, you couldn't, whoever was focusing on their business went off. They also have to know what is government doing and everything, what is the social norm and everything. RBI and capital market regulations, trade union and social environment. Inside the firm, you control it. Outside the firm, what do? You respond to it. This is all about the unit one. So, we have learned everything in detail. So, let's revise again. What did we do? We started with introduction to business economics. Economics is derived from the Greek word oikonomia, that is household management. And this is an MCQ alert. That is Adam Smith wrote the book Wealth of Nations. There's a production. What does the country produce? 1776, the first modern book in economics. Then two fundamental facts that all of us know. Wants are unlimited and resources are scarce. Definition is clear cut. How do you use those scarce resources to satisfy your unlimited wants? That is nothing but economics. Got it? And what is business economics? How do you solve your business problems? Business practices. I gave example of, filing the tax returns. You study Income Tax Act, that is economics example. But how do you practically imply, apply it? You study law of demand curve, when price increases, the demand decreases. When price increases, the demand decreases. When price decreases, the demand increases. This you studied it. How do you apply it? How will you apply it? Reducing the price, increasing the price. Should I give discounts during these hours? These are the decisions, business decisions you make. Oh, got my point? And these are tools used like linear programming. You use all these tools to make decisions. Practical, you're taking the decisions. And then we moved here to MCQ ready. These are very important. Business economics is the use of economic analysis to make business decisions using the best use of organization scarce resources. And this one is very important. Royalty income example. Then we moved on to micro and macroeconomics. Micro is your firm, your pricing, your custom behavior level, etc. Right? What is macro? Macro, you think from a larger point of view, right? You think from a national income out and everything. In microeconomics, you just think about should I hire 5 employees or 8 employees today? How many burgers should I produce in this morning shift? Should I offer discounts during 3 to 5 p.m.? All these things. Should I open the second outlet? These all are the micro factors. Macro factors is nothing but studying the national income output. Does people have money? What is the government policy saying about it? Did government give any subsidy for us? If we buy these products, we are getting subsidy. That will reduce our cost. That's why we want to learn about macroeconomics, because if we are buying those products, which we are getting lot of deductions exemption, that will lower our cost and thus we can maximize profit. So this both work hand in hand, just all alone. Got it? This both work hand in hand. And then we moved on to the nature of business economics. There are four characteristics, that is the science, micro based, macro based, art. How do you manage it? Whatever uncertainties come, how do you use your creativity and handle the scenarios by giving loyalty discounts and everything. Market theory or studied. You understand the law of supply, law of demand, and a lot of market theories. Pragmatic, it solves real life scenarios. It gives you the solution by understanding economics. Interdisciplinary, that is mathematics is involved, stats, competitive analysis, all these analysis are involved in your business economics. Normative is nothing, says positive economics says what it is actually. It's a fact, it just states the fact. The normative says when the petrol prices are increased, the government should reduce the tax. All these suggestions, the normative economics gives. And here there are, different, positive and normative cars, plus and minus. Positive, what does it say? And normative, what does it say? And everything. So what does ICI say? Business economics combines both, leads more towards normative, that is decision making and policy. There should be a blend of everything. And scope of business economics, we learned about the internal issues. Internal issues are the pricing decisions, as well resource allocations and everything. These are the internal issues. External issues are drought, rain, weather conditions, national income, unemployment level, and everything. These all government policies, RBI regulations, and everything. All this affect. I hope you got this point. Yes, that's it for today's video. In tomorrow's video, we are gonna start with basic economic problems of an economy and role of price mechanism. So see you in the next video. Thank you.